Assalamualaikum and hello everyone. Welcome back. I am Madam Yusna Lisa. If you are new here, welcome to the channel. If you are returning, welcome back. And I'm going to discuss today is a question regarding Mfrs 140 investment property, and I'm discussing this question February 2022 FAR270. So let's start with the question. So let's read the question first. You have question 2A. So question 2A, you have Mfrs 140 investment property is defined. So it's giving the definition of the investment property: land or building, part of a building, land or building, and also both, which are held to earn rentals for capital appreciation or for both. And it is not for use in the production, not for supply of goods, not for services, supply of service, or for admin purpose. Or it is also not held in the sale in the ordinary course of business. So therefore, these are investment property. And some properties where owners who let out the properties to the tenants that also provides ancillary service. Apart from rental here, the issue is also about providing ancillary service. We are asked to describe whether rented properties that provide ancillary service, can that be recognized as investment property in accordance with Mfrs 140 investment property. So let's look at the answer. Before that, let's plan our answer, plan your answer, and let's recall. So what is actually property with ancillary service? This is where property that are held by the owner for rent, and at the same time it provides ancillary service, and the reporting owner is the one that provides those services such as security and maintenance. The issue is, if you come across this, if the ancillary service provided are not significant, so you're going to apply Mfrs 116, meaning that the whole property will be treated as PPE. Okay, so that is not our answer, because the question asks you about when shall we treat it as IP. So it is the second situation where, if you look at this diagram, the ancillary services, if it is provided not significant or insignificant, therefore the property will be treated or recognized as investment property. So that is the point that we need to take note. This right. So let's look at the answer. So you just write a very brief answer, because that's for 2 marks. According to Mfrs 140, the rented properties, which refers to building, or let's say here it is going to be a property, shall be recognized as investment property only if the ancillary services provided are insignificant, which is actually to do with this, to the arrangement as a whole. So you apply this as investment property under Mfrs 140. So done with the first one, which is for question 2A. Let's look at the second question. This is about another company, which is Anabina, that developed 15-story buildings. So there are 15-story building here. So you have that 15-story building, and which was completed on 30th of September 2019, the date of completion, and it was with a construction cost of 10 million. So there are no other costs, but this is the cost given. So this is the initial cost on the date that it is being used as either IP, right? So we have to see this. So it is using the top floor, meaning that 1 out of 15 floor, it was used for office rent, office as an own office, and it rents out. So it rents out the remaining building, which is the 14th floor. It was being rented out. So 14th floor is here. So this is being rented out, but this is for its own use. So we call this owner occupied property, OOP. So owner occupied property. So we're gonna use red to differentiate that. So this is OOP. Okay, this is the issue, and this is what you call property with dual use. So meaning to say that this is property with dual use, where it has the function as owner occupied as well as for being rented out to the tenants. And the tenant is AstraZeneca. This is the tenant, and you are Ana Bina, a non-statutory entity, and starting from 1st of October. So the initial recognition date of the item building should be on 1st of October 2019. And AstraZeneca uses the building to run a hotel business and paid a monthly rental of 200,000. So this monthly rental of 200,000 is paid by the tenant to the reporting entity here is Ana Bina. So there was an income to Ana Bina, this 200,000 per month, but that was actually an expense to AstraZeneca. We're looking at the point of view of Ana Bina. Ana Bina provides some insignificant ancillary service. So insignificant ancillary service in the business operation of AstraZeneca at a cost of 2,000 per month. The floors of the building cannot be sold off separately. So this is an important statement. So that's this. So this one is showing that the building also has ancillary service being provided by Ana Bina. And at the same time, the building cannot be sold off separately. So the economic life of the building is 30 years and it adopts fair value model. Fair value model means there is no depreciation for the items building should it qualify to be an IP. So we have to discuss this accounting treatment for the building for the year ended 30th of June. And remember, it will start actually 1st of July 2019. However, since you only have the building being rented out and used as own office starting from 1st of October, so therefore that is going to be from 1st of October 19 until 30th of June 2020. Okay, that's what we're going to discuss in terms of our accounting treatment. That is the duration. So let's plan our answer. First, this is a situation where we have a property with mixed use or property with dual uses. Dual uses. So meaning that it is used as owner occupied property and it is also being used for being rented out, or maybe it can also be used for capital appreciation. So we'll have to see this. So the guideline on Mfrs 140, before we start writing our answer, let's just recall a little bit on the guideline given on Mfrs 140. Under Mfrs 140, for this property with dual uses, so you need to go and see whether or not each portion can be sold or leased out separately. So can it be sold or leased out separately? If the answer, meaning that you have now 15-story building, if all 15-story building, each of them can be sold or leased out separately under finance lease separately. So if the answer is yes, two parts are accounted for separately, meaning to say that if you have, in our case here, 1/15 and 14/15, if the answer is yes, it will be accounted for according to Mfrs 116 for the owner occupied property, if it can be sold off separately, or according to Mfrs 140, if it can be accounted separately. In our case, you are informed that the building cannot be sold or accounted for separately, meaning that it cannot be leased off separately, leased out separately. So here, if the answer is no, you need to check whether or not the insignificant portion is held as owner occupied property to qualify that to be an IP. So in our case, it is 1/15 that was used as owner occupied property. And therefore, we can account that as an IP because only 1/15, which is an insignificant portion. However, if the portion held for owner-occupied property is significant, the whole property will be accounted for as PPE. So in our case, this is not relevant because our case is where 1 out of 15 is held as owner-occupied property, and therefore 14 out of 15 is being rented out at the same time provided by with ancillary service, and the ancillary service provided was insignificant. So for the first analysis, we are going to conclude that this will be accounted as an IP because it is actually being held insignificantly as owner occupied portion, which is the owner occupied property which were used for its own office here. So if you recall back what I did here, for the case of ancillary service, remember the same property just now also provided ancillary service, and our case just now was that the insignificant ancillary service. If that is the case, it will apply Mfrs 140 and it will account as IP. So in our case, the insignificant ancillary service here, so this shows that it will be accounted for as an IP because of the insignificant ancillary service. So the building now is accounted for as IP. So you can refer to point A, which is discussion that I just did for A, to rely on this. Okay, so therefore, for both situations, it will be accounted for as IP. So let's look at how do we write the answer based on this diagram, and also take note we have insignificant. Again, here I put insignificant ancillary service AS. So let's look at the requirement that you asked to discuss the accounting treatment for the building for this year ended 30th June. So you need to discuss starting from 1st of October up until 30th of June 2020 for that 9-month period. 9-month period. So on 1st of October, this is on initial measurement. I put here IM, and also initial recognition. So on 1st of October, the date, the whole building with dual users, remember, it is held for owner-occupied as well as for rented property. However, the rented property is more significant. So it is recognized as an IP under Mfrs 140. Why? Give this reason as it cannot be sold or leased out separately, and the portion held as owner-occupied is insignificant. Show what is the portion, which is only 1 out of 15 floor, as compared to the portion held for rental, which is significant, that is 14 out of 15 floor. In addition, the ancillary services provided by the company is insignificant to the arrangement as a whole. So that was the reason it was recognized as an IP. Now that is the initial recognition. Now we go to initial measurement. Initial measurement. So initial measurement will talk about the cost. Here we recognize at cost. When was the date? It was on 1st of October 2019. Since the company adopted fair value model, so here you were being informed it is adopting the fair value model. Here you are informed very clearly. Okay, we will just ignore the economic life because we are not providing any depreciation whatsoever since the company adopt the fair value model. So therefore, you have no depreciation to be provided. For the year ended, you are going to reflect that at fair value. However, there is no fair value given in this question, as at 30th of June 2020, you are only given the initial costs of 10 million. So you just will mention about that at the end. So for the year ended 30th of June, there were two things that happened. One is the rental income. The rental income here, if you read the question, you have a rental income of 200,000, yeah, because you charge AstraZeneca. At the same time, you provide Anabina, the reporting entity, provide insignificant ancillary service, and that is incurring a cost of 2,000 per month. So for 9 months, you need to go and calculate how much is that two figures there, 200,000 and the 2,000 figure here. So one is an income, the other is an expense. So rental income is 1.8, 9 month times 200,000. And another one would be your, just take another color. It would be your ancillary expenses of 18,000, which is 9 month times 2 million, 2,000. So that will give you 18. And the previous one was that was an income, rental income, and the second one was a rental expense. Sorry, it was an ancillary expense because you provide ancillary service, maybe security and maintenance, and that will be recorded as other income. For the rental income, it was an other income. Rental income is an other income, whereas the ancillary service will be treated as expense or admin expense respectively. As at 30th June 2020, the carrying value of the investment property shall just be at 10 million because there is no fair value assessment being made yet, for that initial cost of 10 million. So it is still 10 million because there is no depreciation to be provided since the company uses the fair value model. Okay, done with that. Now you are asked to prepare the journal entries for the transaction happening in this question 2B, the one here. So there were few things that you need to record, only 3 things, which is here. Number 1 is to record the initial cost. So this one is the initial measurement, which is the initial cost. So you will debit bank, investment property, and you will credit bank or maybe payables if that is on credit, 10 million. And this is subsequent measurement. This is to record the rental income, right? If you have accrued rental income, so maybe you are going to go also debit the accrued rental income, which is I put here as receivable. Credit rental income, so that goes to the other income section. And another one is ancillary service expense, which is an expense that will be in the SOPL as well. SOPL 18,000, and that is for the journal entry. Next one, you have the question relating to Selassie, which is part C. Here is the question on transfer, and this is a transfer from investment property to PPE. Okay, let's read the question first. You have a building that was rented out to an engineering firm under operating lease. So the keyword here is rented out under operating lease. So therefore, this is an IP. The building was purchased on 1st of January 2019. So 2019, this is the date of purchase. And the initial cost of the building was not given. It is not given. You will just mention that it was purchased with a useful life, expected useful life. Here is 30 years. Okay, that is what happened. Then on 31st of March, which is here, 2020, you were informed that the carrying value of the building, which was purchased on 1st of January 2016, the carrying value now is, sorry about that, just go back to the question. Okay, let's go. Oh yeah, so the carrying value here is 2.5 million. On 1st of April, which is right after, somewhere here, after a day, 2020, you were informed that the fair value is 20%. It was increased by 20%. It means that it was 120% increase, meaning that the fair value is 120% from 2.5 million. That will give you 3 million. So that was the fair value, because increase by, if you have decrease by, you have to put it as 80% here, reduction of 20%. It is the policy of the company to use revaluation model to measure its PPE and fair value model for its IP. So for the IP, which is starting from 1st of January 2016, this part, it is using fair value model, and this is going to be IP. However, starting from here onwards, it is going to use the revaluation model, because it is a PPE, meaning that you will have depreciation, and also you will take into account whether there is a revaluation surplus or deficit. We have to see that. But this is what we are asked to do, which is to advise on the accounting treatment on the date of transfer only, which is on 1st of April from IP to owner occupied property, to advise Selassie Berhad. So what you need to do is to look at the date 1st of April. What is the carrying value on 1st of April of the IP, and what is the fair value of the item as a PPE on the same date of transfer. So let's see what we have here. 1st of April, yes, number one is that you need to mention that there is a change of use. Change of use. Change of use here means change in the use of the asset from property being rented out now to become owner occupied property. Building being rented out under Mfrs 140 now becomes owner occupied property, because there is a transfer, and now that was due to the change of use, and it is now starting from 1st of April going to be treated as Mfrs 116 property, plant and equipment. The building on the date of transfer, 1st of April, will be measured at the deemed fair value of the property. Remember, deemed fair value of the IP on the date that 1st of April was 20%, increase of 20% from the previous carrying value. So it was 2.5, so it becomes 3 million. The difference between the fair value, which is 3 million, and the previous carrying amount on the date of transfer, you have 500,000. Fair value 3 million, you can refer here, fair value, and the carrying value was 2.5 million, so you will have 500,000. This will be recognized in the statement of profit or loss as a gain on fair value changes. So from there onward, there is no more IP, and from here onwards, building shall be depreciated and shall be also accounted here, accounted as PPE, and it is depreciated over its remaining useful life, and therefore will subsequently be measured using revaluation model. From here onwards means from 1st of April 2020. Okay, that's it for this question 2 February 2022. I hope that helps you with the understanding of accounting for investment property. With that, I'll see you when I will see you, and Assalamualaikum.